Welcome to the exciting world of options trading. Today, we're diving into a fundamental tool that every beginner should master: option chain analysis. An option chain is like a menu for options traders. It provides a snapshot of available options contracts for a particular stock. Let's break it down. Here, we have the option chain for XYZ stock, with calls on the left and puts on the right. Calls give you the right to buy, while puts give you the right to sell. Let's focus on call options first. The option chain lists different strike prices and their corresponding premiums. The strike price is the price at which you can buy the stock if you exercise the option. The premium is the price you pay for the option contract. Now, on the other side, we have put options. These give you the right to sell the stock at a specific price. Similar to calls, you'll find different strike prices and premiums for puts. The choice depends on your trading strategy and market outlook. Pay attention to open interest and volume. Open interest tells you the total number of contracts in existence, while volume shows the number traded during a specific period. High open interest and volume indicate strong market interest and liquidity, which is crucial for smooth trading. Implied volatility reflects market expectations. A high implied volatility suggests larger potential price swings, influencing option prices. Understanding these factors helps you make informed decisions based on your risk tolerance and market outlook. So, how do you choose the right option contract? Look at the strike price, premium, and the Greeks, especially delta, gamma, theta, and vega. These help you understand how the option will behave under different market conditions. Remember, the key is aligning your option strategy with your overall trading goals. Congratulations! You've taken your first steps into the fascinating world of option chain analysis. Keep exploring, learning, and practicing. The more you understand, the more confidently you can navigate the markets.